A subsidiary LLC is a powerful business structure that can help protect your assets and expand your business operations. This separate legal entity is owned in whole or in part by another LLC, known as the parent company. When properly structured, subsidiary LLCs offer significant liability protection, operational flexibility, and strategic advantages for growing businesses. The concept is straightforward. Your main LLC creates and owns another LLC to handle specific business operations, assets, or ventures. This arrangement creates a legal separation that can be invaluable for risk management. If one part of your business faces legal troubles, the assets in other entities remain protected. One of the primary benefits of forming a subsidiary LLC is liability protection. Debts or lawsuits against one entity typically cannot affect the others. For example, if your subsidiary faces litigation, the assets of your parent LLC remain shielded. This compartmentalization of risk is especially valuable for businesses with multiple revenue streams or high-risk components. Subsidiary LLCs also offer operational advantages. Each entity can have its own brand identity, allowing you to target different markets or customer segments. This structure streamlines management by organizing business functions into distinct legal entities. Additionally, valuable intellectual property can be isolated in separate subsidiaries to protect these assets from operational risks. However, this structure does come with potential drawbacks. Each LLC requires separate state filings, annual reports, and tax forms, which increases administrative work and costs. Managing multiple tax filings can become complex, especially if subsidiaries operate across multiple states. There's also the risk of piercing the corporate veil if you fail to maintain proper separation between entities. Creating a subsidiary LLC follows a similar process to forming any LLC. First, choose a unique name that includes a designator like LLC or limited company. Then prepare and file articles of organization with your state, listing your parent LLC as the member or owner. While not always required, drafting an operating agreement is highly recommended to outline how the subsidiary will be managed, ownership percentages, and member responsibilities. To ensure proper legal separation, maintain distinct operating agreements for each entity. Keep separate financial accounts with dedicated bank accounts and accounting records for each LLC. Sign contracts in the name of the correct LLC and use separate branding when appropriate. Regular documentation of important decisions helps reinforce the independence of each entity. Tax treatment for subsidiary LLCs depends on their structure. A wholly owned subsidiary is typically treated as a disregarded entity for federal tax purposes, with income flowing through to the parent. Multi-member subsidiaries are usually taxed as partnerships. Alternatively, subsidiaries can elect corporate taxation by filing the appropriate forms with the IRS. Even disregarded entities may need to file state-specific reports and pay state-level fees. Many businesses use the parent LLC as a holding company that doesn't conduct operations but owns controlling interests in subsidiaries. This structure centralizes control while isolating liabilities within individual subsidiaries. It's particularly effective for real estate portfolios, franchise operations, and businesses with diverse product lines. Before forming a subsidiary LLC, consider alternatives that might better suit your goals. A DBA, doing business as, allows a parent LLC to operate under different names without forming separate entities, though it offers no liability protection. Internal divisions within the parent LLC avoid creating new legal entities but limit liability protection. Joint ventures might be more practical when collaborating with other businesses. Once established, maintaining compliance is crucial. Each LLC must file annual reports and pay fees to the state. Keep financial accounts completely separate between parent and subsidiary LLCs. File all required tax documents on time, and maintain updated operating agreements. Failing to observe proper corporate formalities could result in piercing the corporate veil, exposing the parent LLC to subsidiary liabilities. The subsidiary LLC structure offers significant advantages for businesses looking to expand while managing risk. By creating separate legal entities under a parent company, you can protect assets, streamline operations, and create distinct brand identities. However, this structure requires careful maintenance and compliance to preserve its benefits. With proper planning and management, subsidiary LLCs can be a valuable tool for growing and protecting your business interests.